All right, we are now in our regular avatars. It's going to be market time for some time now before, we prepare for the evening and for the celebration.
Yes.
For the moment, it is top 10 time, isn't it?
Yes, it is. So let's start off with our entire team. As you can see, some of them are in their jerseys as well. So let's ask them why they're supporting their teams. But Anuj, first over to you.
So the teams or the stocks?
First the stocks, we will come back.
Whatever you're more passionate about.
No, we already spoke about the passion, so let's talk about stocks now. HDFC and HDIL, two stocks I'm watching out for. HDFC because for last 2 days, that's one stock which has seen a lot of intraday volatility but has been backed by very high delivery-based buying. So really, I mean, this is one stock, very low free float. FI favorite stock, so that's the one to watch out for in terms of sentiment. And on the other hand, you have an HDIL, which is clearly the sentiment barometer for the mid caps. Yesterday it was down quite a bit and saw quite a bit of unwinding in F&O market, so this will be one stock to watch out for.
Right, let's get to Nigel. Nigel, for the moment, just forget Viva FIFA and speak about stocks. Despite your jersey, you're looking at Indiabulls Realty very closely.
Indeed, Lata, Indiabulls Realty should definitely be. There's something brewing over there because yesterday, in fact, as well, we did see close to around 19 lakhs getting shared. And remember, in fact, the stock is an F&O ban, so you can't take a fresh position in the F&O market. 90 lakh shares were shared yesterday, and if the stock needs to come out of the F&O ban, then it needs to shed close to around 22 lakh shares. So that's a possibility, and that could happen today itself. So those people waiting to take a position in the F&O market, they maybe by tomorrow, in fact, that opportunity could come for them. Also, the open interest concentration is what I've been looking at. In fact, close to around 5 clients, they hold 49% of the total open interest. So every client, in terms of number of shares, they hold close to around 36 lakh shares. So that stock should be on your radar, as well as Crompton Greaves. That's the other one with regard to the concentration of open interest. 4 clients, in fact, hold close to around 50% of the open interest. And in fact, that amounts to 35 lakh shares. So both these two stocks you need to watch out for.
All right. I asked for one, I get two. Thank you, Nigel. Sonia, you're watching Tata Motors. I think you're watching it more out of force of habit. Is there a fresh reason?
Well, there is. Yesterday, they delivered their May retail sales numbers for Jaguar Land Rover. And again, it was very strong in terms of growth. And some brokerages have actually raised their target prices. So I just wanted to point that out. JP Morgan has a target of 482 on the stock. They say that the retail sales have surprised positively. The growth was pretty much driven by Land Rover this time around. And the sales growth has been double-digit in across geographies, whether it was China, whether it was US, etc. So that's the big positive there. Now, Morgan Stanley raises a good point. They say that the valuations now look a little expensive. So they remain equal weight. And they say that the May volumes are in line with what the street was expecting, but the valuations at about close to 8 times FY16 appears a bit full at this point in time. They also say that the sales for Jaguar has decelerated to 4% in May versus 17% in April. So that's something that you need to keep on your radar. And finally, UBS is the most aggressive on the street. They have a target price of 540 on Tata Motors. So they expect big upsides over there. But from one Tata Group stock to another, Rima, you have TCS on your radar?
Indeed, because Bank of America Merrill Lynch yesterday had a conference call with the President of North America as well as Europe. And the 3 key takeaways from them. One, they said that the demand environment for CY14 appears better than CY13, something they've been maintaining. And discretionary spends are on an uptrend led by financial services, retail and manufacturing are also participating in that. They're saying the impact of the rupee appreciation can be mitigated by recalibrating some of the recent investments. So margins are likely to remain in a narrow band, and they expect digital to drive the expansion of market opportunity. And remember, there is an analyst meet on Friday at 4:30 p.m. So we'll get greater color on what the demand environment looks like for TCS. But as of now, it appears pretty steady. But I'm watching for 2 other telecom stocks as well, Lata and Sonia. So one of them is Macquarie, where they say that Idea remains their top pick, and the recent equity issuance that they've done, so 3,000 crore via QIP, plus they're raising 750 crore via Axiata, will strengthen their balance sheet. The total equity dilution on the back of this fundraising stands at 8.3%. But they say that for Idea, it's a high regulatory cost, which is a concern, and therefore this recent fundraising will help in strengthening their balance sheet. So for instance, their net debt to to equity will now come down to 0.95x versus 1.2x. And remember, it also generates a cash profit of $1 billion annually. So a combination of both of them will help in their future regulatory cost burden. And lastly, sorry to go on, it's Credit Suisse, which has downgraded Bharti to an underperform, and they continue to maintain an underperform on Idea as well as Reliance Communication. They said that they will use any bounce back in these stocks to trim their positions. And the key reason for that, they say it's the upcoming launch by Rel Jio is a major structural event for the sector, and the magnitude and impact of the launch is perhaps not appreciated yet by the sector. And they're giving one data point. They say the scale of investments which are pumped into by Rel Jio is comparable to what Bharti and Idea have already invested through their lifetime. So that's the kind of investment that Rel Jio has put in, and plus after the recent run-up, they say Bharti is looking expensive. Back to you.
All right, Reema, that was exhaustive. I hope it's not exhausting. Thank you very much for all those talks. Ekta, you've ICICI on your radar for not a very pleasant reason.
Absolutely, Lata. Well, reports indicate that the bank has let go of 1,200 people and a few hundred may be more on their way out. We do understand the reason is to increase operational efficiency. The redundancies are due to restructuring according to the bank, and the bank has stated that the bank once in 3 years looks to basically merge or split jobs and do that sort of restructuring. So that is in line with it. The retrenchment, we do understand, is across the board. So it's from general managers to junior officers as well. And this is a small part. They have an employee base of around 70,500 people on its roll, but the remaining job cuts which are expected is expected to be over the next 3 to 6 months. And this is disconcerting because they did not cut jobs during the slowdown in 2008 as well as in 2012, 2013, but they have managed to cut jobs now. Another data point with regards to ICICI Bank, in Q4 their operating costs rose 20% year on year, and one of the reasons was because their employee costs rose 26% as well.
Okay. Well, to be fair, while there is a personal hurt over there, it is, I think, for the stock, it will be seen as positive.
All right. Well, Unitech is on my radar today because yesterday the stock saw some massive delivery-based selling. So the stock was down almost about close to 8%, and more than 3 crore shares were marked for delivery yesterday. The reason we are highlighting this is because, we have in the past advised investors to stay away from some of these stocks that are just riding the wave on the upside. So Unitech is one of them. In fact, delivery-based selling is 50% higher than what we've seen on an average. Now, in terms of fundamental news, CIMB has maintained a reduce on the stock. They have a target price of 20 rupees, and this is after the sale of the UCP ITSEZs yesterday. Remember, the UCP sale was done at £206 million to Brookfield, and this is only a 10% premium to the NAV of around £187 million. So some analysts on the street were expecting the deal to be done at higher valuations. Now, CIMB also says that the good part is Unitech is taking steps to deleverage, but the bad part is that they have so much in terms of off-balance sheet liabilities that it will take a long time for them to cure their problems over there. But Unitech, perhaps more to come on the downside. But Nimesh is here with us. Nimesh, why do you have Ashapura on your radar?
Well, Ashapura Minechem will definitely be in focus, but I'll be more watching out for Orient Abrasives. We don't talk about that stock much, but there are media reports suggesting that Ashapura Minechem is looking to buy out Orient Abrasives for 400 crores. This will include buying out promoters' 25.5% stake and a 26% open offer. The media report suggests that the open offer price would be at around 31 to 33 rupees per share, which is a 35 to 40% premium to yesterday's closing price of 23 for Ashapura Minechem. That particular stock is in a 20% circuit, so it can actually go up to 20% if these reports are to be true. Now, if you look at the history of these two particular companies, in last November, Orient Abrasives promoters had sold 18% stake to Bombay Minerals, which is a subsidiary of Ashapura Minechem. So it looks like the deal is pretty much on. We don't have independent confirmations from either of the parties, but if the media reports are to be true, maybe you can see Orient Abrasives, probably rallying a good 20% in today's trade on the back of these reports.
All right. So that's the top 10 stocks that
that's important news. The emphasis